All right. Today we're going to do something a little special. We're still going to look at the indices, but we're not going to look at the typical stocks we look at. Today I'm going to talk about why we are seeing a rotation in the market and why this rotation is so important and why this rotation is going to trap a lot of bears. When I say trap bears, I'm talking about the people who think the market is weak and think the market is going lower and actually think we're near a top and think we can't go higher. All of these people calling for tops or calling for 10% corrections or calling for any sort of major pullbacks, or bless the people that are still calling for crashes. You need to make sure you watch this video if you are bearish, if you have a bear bias. There are so many objective things on the chart that are telling us we are going way higher, and do not ask me to explain how or why we are going higher because I don't care to explain the reasoning. I am just reading the charts. And you are going to see something today that might blow your mind. You might think I'm off my meds for some of the things I'm going to talk about and some of the things I'm going to show you. But I don't care because all that I care to do is listen and read price action on the chart. I don't care about a lot of your opinions. You can share them, and I know you trolls love to do that anyway. But quite simply put, no opinions matter, even mine. That's why I objectively read the charts. And today, you should look at every single chart I'm about to show you because every single chart that I show you is going to be significant. And if you do not understand the bigger picture, you are going to be that much less likely to understand what is about to happen in the near term. So first things first, I want to make it very obvious. This is a bull trend, which means we should be buying dips at support. And yesterday on SPY, I drew this arrow and I told you that from this resistance at 561, there was a good chance that we would get a pullback to the previous close on Tuesday. And that is exactly what we did. And as you can tell, we did not close below that level. But the first thing I'm going to tell you is that every single bear, especially the retail bears out there that have only tech stocks on their watch list, they think today was extremely bearish because guess what happened today? Every single tech stock was selling off in a big way. The majority of the SPY ETF is the tech sector, so it got hammered today as well. But if you just stop there and you just think this is the whole story, you are going to incorrectly think this is bearish and you are going to get bear trapped and you are going to wonder why the market is still going higher. So the first thing I want to tell you is that this arrow that I drew, I strongly believe it's going to play out. And there's a very simple contingency is that if we start breaking down below 554, there is a good chance we're going to 548. And in that case, I would simply say from 548, then we are going to go higher. So I would just say it's still buy the dip as we're breaking down. You can figure out how you want to trade that yourself. If you think that's worth shorting, that's completely up to you. But if you understand in a bull trend, you're much better off trying to buy dips. I do believe that is the better trade plan route to go, but do as you want. It's your money. I don't care how you trade it. Just understand bigger picture. We are still likely going higher. So I got that out of the way. I'm going to explain in more detail why all of these things are the case. But right now on SPY in the short term, you simply just need to watch this support zone between 554 and 556. And if we do not break down below that support zone, it is another bear trap and we are going to another new all-time high right around 564. On the NASDAQ 100 triple Qs, we were down 2.19% today. And again, just like SPY, I'm calling this a bear trap. We're likely going to go just a bit lower if we even go lower at all. And then we are going on another face-ripping bull rally to trap all of these bears who are shorting the triple Qs, which simply means this is buy the dip above 485. And if we break below 485, we're going to get risk off. Above 485, it is risk on and likely going higher towards 511 and then 517. On the Dow Jones, we were up 0.09% today, and the Dow Jones had another extremely high volume day. And while we didn't go very far, we have the bull trend, we have the bull breakout, and we are sitting at the next resistance just below 398. And more importantly, these Bollinger Bands are starting to expand to allow this bull rally to start gaining some legs. And as you can tell from my arrow, I do think we're going higher towards 402, and then above that, we're going to another price target at 407. And I actually think we're going to go way higher than all of these price targets, but let's take it day by day and step by step. And right now in the Dow Jones, if we get any pullback and cannot break down below 394, that is an obvious buy the dip situation before we go much higher. And then you can manage your risk if we start to break down below support for a very tiny loss. So once more, I'm not predicting we need a pullback. I don't think we're going to get one and I don't think we need one. But if we do get one, it is still a buying opportunity before we go any higher. If I'm wrong, we'll break below this support zone and you could get risk off. So you have a contingency plan on how to get out of it. But more importantly, you need to understand this is the highest probability with the best risk reward because you have very little risk to be a bull for very high reward and you're trading in the direction of the strong bull trend. So remember, you want to stack the odds and the risk reward in your favor, and that is still the bullish trade in the Dow Jones. On the Russell 2000 IWM ETF, we were up 3.59% today, and this is by far the most important indicator from the whole entire market. And this was the trade that I was the most bullish about, because in the Discord server, this has been a trade idea, and you could probably tell if you're a regular viewer of the YouTube videos, I drew this arrow a long time ago that from the high 190s, I thought IWM was going into the high 220s by September, and you can tell with today's very powerful bullish thrust higher and the break of the previous high at 210, that this is now looking more and more likely what is going to play out. And the interesting thing about today is that if you were not bullish on IWM, you are just now starting to get this on your radar with today's bull breakout, because a lot of bulls don't like buying low because they don't understand how to read price action. And they didn't understand these were low risk entries for a very bullish chart. And I'm not knocking anybody who wasn't in this, and I'm not knocking any bulls that have a different strategy than me. I am simply saying there is going to be a lot of new money coming into IWM with this bull breakout, because if you really just look at this, this is an extremely bullish higher low into a higher high breakout, and bulls that like buying breakouts and want to jump on that momentum are going to be entering now that we're above 210. So understand what I just said, because that is a very important reason why the whole entire market is about to go on a face-ripping bull rally. This is the breakaway gap we've been looking for in IWM, and I do not expect this gap to fill. Even if we get any pullbacks, it is likely going to leave that gap open before we go even higher, which gives us at least enough room to pull back to the low of the day at 207. But more than likely what will happen is we'll get another powerful thrust higher, and any pullback from there would likely still stay above the breakout at 210 before we continue a bull trend. So I don't really care to predict or speculate exactly how it's going to play out. It's just more important to understand that bigger picture. This is an extremely bullish breakout, and this is a very important breadth thrust for the entire market, because a lot of the breadth in the market was focused in those magnificent 7 big tech stocks. And today the triple Qs were down over 2%, while the Russell 2000 was up over 3.5%. That is a breadth thrust because the small cap stocks are moving higher now while the mega cap stocks cool down, which means money is rotating around and starting to move through the market. That is a healthy indication. That is a bullish indication. And when you get these strong breadth thrusts, you do not want to ignore them, and you definitely do not want to short them. So if you look at the small caps, this is extremely high volume on an extremely bullish breakout. And this is a multi-week consolidation breakout, just like we had on Tesla stock before Tesla went parabolic. So do not for 1 second think that it's not possible for IWM to just go on a face-ripping parabolic rally and never look back. Again, these are just speculations. Price action needs to do all the talking, but the price action did a hell of a lot of talking today in IWM. So keep this in mind. This is definitely one of those trades you do not want to ignore. Above 207 and 210, this looks like another face-ripping bull rally starting to develop in IWM. And overall, this is very healthy for the bull market. And if you zoom out here and you just draw a neckline here at this breakout, this looks like a giant inverse head and shoulders pattern, which is a very bullish pattern that is only confirming more and more about my speculations that we're going towards 228. So you don't have to agree with me about anything that I'm telling you. As I told you, I do not care if you agree with me. I do not care if you have a different opinion. I am reading the charts and I am telling you what the charts are saying, and that carries way more weight than any of your opinions or any quote unquote expert analyst that wants to go on the news networks or write an article on the internet that they're expecting a deep pullback coming soon. You can go listen to those speculations or those perma bears who keep telling you the market's going to go lower, or you can look at the chart and follow the objective price action that tells us that we're going to go higher. Okay, so this is where I go off the normal script and we don't look at the things we typically look at. Today, I'm going to show you things that I look at and things that are going to help you understand why I'm so damn bullish. So first up, we're on Berkshire Hathaway, and if you don't know what this is, shame on you. This is the ETF managed by the great investor Warren Buffett, where he has proven over decades and decades that he can outperform the S&P 500, which is something that a lot of money managers don't even come close to doing. So when I look at Berkshire Hathaway, the first thing I notice is that we have have a mega wedge here, which is one of the largest wedges you will ever see in the stock market. And that bad boy just started to break out bullishly with a very impulsive candle, all on increasing volume. So we are getting multiple indications here that this is the real deal breakout. And if you look at these moving averages, they are all now stacked to the bullish direction and starting to accelerate and create separation as this bull trend is strengthening. And to add insult to injury for the bears who are still shorting the market, this is also a giant double bottom breakout, which means there is a ton of evidence, no matter how you trade and what kind of things you are looking at, that this is a continuation pattern. That means we're going way higher. And the first thing I'm going to tell you is that Berkshire Hathaway is about to break out to brand new all-time highs and continue running. When you get a consolidation this long in the making and you are getting a high volume breakout, that is all of the buyers and sellers coming together and agreeing that price needs to go higher. And if you try to get in the way of this bullish freight train, you are going to get ran right over. So if you do not see this as a reason to be a lot more bullish on the market as a whole, you are going to miss another face-ripping bull rally. And I will be here to tell you we saw it coming from the price action on the chart. Now, don't for 1 second think that that means we have to continue to go up every single day. It is still very possible we could get a retest of this breakout and then go get the face-ripping bull rally. So nothing that I'm telling you has to happen tomorrow. This is all bigger picture. And this is important to understand that bigger picture. We are going much, much higher. Whether you agree with it or not, or whether you like it or not, the market could not care less what you think. This is what the market is telling us it wants to do. And this is what is likely going to happen with the highest probability chance. Next up, we're going to jump over to XLF, which is the financial sector. And on the financial sector, this is where you're getting a lot of the banks. And the banks do report earnings tomorrow with the PPI data release. So we are going to have a double catalyst for some kind of acceleration in the XLF ETF to really get price moving. And what I want you to understand here is that we have another wedge that is starting to break out bullishly if you draw the price action here. But more importantly, what I like to see on this chart is this giant inverse head and shoulders on XLF that is starting to get this bull breakout. And that means we are going to a brand new all-time high that is going to be above $43. The banks are about to report earnings, and that is likely going to be the catalyst that really gets this breaking out and really starts to get it to accelerate. But like I told you before, nothing I'm telling you has to happen tomorrow. If we did get a pullback to the neckline, that would be a buying opportunity before we then went on to hit that price target at a later date. I favor that we go straight there and leave a lot of people in the dust that don't think this is possible, because if we get a pullback, it's going to give more time for people to react. So I actually am in the favor that we're just going to go straight there and never look back. Again, that is a speculation of my own. Doesn't mean I'm going to be correct. You need to be prepared for the situation where we pull back first. But again, those pullbacks are buying opportunities and not an invitation to try to short this market. Next up, we're going to jump over to XLI, which is the industrial sector. And once more, you are going to notice a trend here. The industrial sector is starting to break out of a downtrending resistance of lower highs and lower lows after a multi-week consolidation period. And when you look at XLI and you draw this neckline out, we just got another double bottom breakout on XLI, which again means that XLI is about to break out to another brand new all-time high. And if you understand the industrials and financials looking bullish, that is also very bullish for the Dow Jones, which means the tech stocks can continue to sell off while the industrials and financials start to run higher. And that is going to actually favor the Dow Jones, which means you want to be focusing more so on the Dow Jones right now and letting those tech stocks cool down and maybe take a back seat in performance, which means a lot of the outperformance in this quarter is going to be in the small caps, the industrials, and the financials. I showed you XLF. I now showed you XLI. I showed you Berkshire Hathaway. I showed you the small caps IWM ETF. And I also showed you the Dow Jones is likely going to new all-time highs. And all of this is just giving more and more objective evidence from the chart and from the price action of why I am telling you these things, not just because I'm a permeable that is praying and hoping price goes higher. This is what the charts are telling us. Now, real quick, we'll jump back over the S&P 500. And the last thing I'm going to tell you is that I have given you a lot of breadcrumbs and a lot of hints on what is likely coming. There is still so much more information that I'm not going to cover tonight, but more and more evidence is telling us this bull market is only gaining strength and it's about to see a more broad-based rally, which means if you only have tech stocks on your watch list and you thought today was bearish, I do believe you just got bear trapped if you shorted this market, and I do believe you're about to get bamboozled as we continue to rip off faces and continue to go higher. Every dip in this market is a buying opportunity while we have the bull trend and we're above support. If we break below support and we break the bull trend, then and only then do I suggest getting risk off. It is buy the dip because the trend is your friend, and this is a bull trend until it's not. Again, everybody's going to have their own opinions. I know a lot of you bears are going to be extremely upset with me for this episode and for telling you we're likely going higher, but I do not care. I'm reading objectively what the charts are telling me. And as I said in the introduction, don't ask me to explain how or why we are going higher. That is not what I'm in the business of doing. That is not my expertise. I am a technical analyst telling you the charts are telling us we're likely going higher. And likely going higher means that we have the best probability to go higher. Nothing is a guarantee. So if you are bullish and trading what I'm telling you, always make sure you're managing risk and understand if we do break down below the risk levels, you will have to manage risk accordingly. Nothing is a guarantee, but the highest probability chance is that we're going higher, and that is the simplest way I can say it. I have given you all of the risk levels. I have given you plenty of objective evidence of why I'm telling you we're going higher. Now it's on you to go do the rest of the work, make your trade plans, understand what you want to trade, where you want to enter, where you're going to exit, whether that's profit or loss. And as I've always told you, just stay objective. I will jump ship on all of my bullish trades immediately if we start to break down below support levels that I have in my trade plan. And I will manage my risk accordingly if we start to see something breaking down in the charts. I am not just going to continue to buy dips if the chart is telling me to do something else. Right now, the chart is still telling me to buy dips. Right now, the chart is still telling me that we're likely going higher. And right now, the chart is telling me that the tech sector may need to continue to cool down while the rest of the stock market continues to go higher. So keep all of that in mind, and I think you will absolutely crush this market. You will know how to trade the PPI data, and you will know what you should be looking for, and more importantly, what part of the stock market you should be focused in. If you want access to all of my trade ideas, my technical analysis, and my intraday updates, that's in my Discord server, and you can find out how to join my Discord server by clicking on the link in the description of this video. We are absolutely crushing this market, and with all of this volatility and sector rotation coming up, now is the best time to be in the Discord community. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.